So let's discuss market technicals and let's also talk about market fundamentals with Ashwini Gujral and Varun Goyal. He's Head of Portfolio Management Service with Karvy Wealth. Ashwini, Varun, gentlemen, good evening to you. Thank you for joining us. Ashwini, Nifty has consolidated this week. What do you make of this week's consolidation and the fact that on a day when global cues were rather poor, Indian markets have managed to close in the green? What does that indicate?
Well, you need a bit of context. This rally is very different from all previous rallies that we had in the last couple of years, because those were, upswings within, an overall sideways market. This rally has come out from a, weekly or a monthly pattern where, the index kept on getting into a narrower and narrower range. Finally, it became a 400-point range, from which we've had a very, very sharp breakout with huge momentum. So chances are that you will not get very sharp corrections or great dips in this market, and very shallow dips will tend to get bought into. The other thing is, now there is no underperforming sector, so to speak. Like earlier we had banking and capital goods, infrastructure going down, the other half of the market going up. So now broadly, almost all sectors are positive. So hence, we should look for small consolidation, sideways moves, but no large dips. And finally, once we are beyond this consolidation, we should head towards 5,900 to about 6,000. Similarly for the bank Nifty also, maybe 200-point type of consolidation. Finally, we should head upwards towards 11,900 type of levels. Meanwhile, mid-cap stocks are likely to pick up and catch up with the large-cap indices.
September has been a dream run for Indian markets. Nifty is up by about 8.5 to 9%. My question is that is all the good news baked in, or we still have some headroom left in the near term?
I think as far as the Indian markets are concerned, there is plenty of upside still available. I think what has happened with this QE is that the commodity prices have either stayed flat or they are downward biased. So I think for India we have a great combination of ample global liquidity. We have flat to downward trending commodity prices, and we have a strengthening rupee. So all these three conditions make India a very, very attractive investment destination for most of the FIIs. As far as the events are concerned, I think we will probably see a much better quarter two earnings once they start in the first week of October than what we saw in the last 2 quarters, because we believe that the growth has kind of bottomed out. We would definitely see expansion in margins as commodity prices cool off, and I think once the interest rates also start reversing by end October, we might see some pressure also easing off as far as the interest liability of various companies are concerned. So I think net conditions look quite positive, and we still see valuation comfort in the market. So we still expect markets to deliver another 10 to 15% returns in the next 3 to 4 months.
What could challenge your conviction, Varun?
I think a very, very sharp increase in global commodity prices. Let's say if crude goes above $120 a barrel on Brent, that could be one big problem area for India. The second thing is if something happens to the political situation in India and we see more uncertainty and volatility in terms of whether the government of the day will survive or not. But other than these two factors, I think the conditions are largely favorable.
Ashwini, let's talk stocks. The first group we have to address has to be the UB Group companies. Across the board, starting from KFA to United Spirits to United Breweries, all of them were on a tear. So what's the way forward for this group, which is only going up because of hope?
Well, there should be some informed circles which know something, and I will talk only from a stock price point of view. When you start getting accelerated moves, like we had United Spirits 10% I think yesterday or day before, again 10% today. Any large stock which starts moving 10% a day, even the other stocks I think are moving up 15-20% a day. This sort of moves is the final stage of any kind of bullish environment for any stock. So just tighten your stops, and maybe if you get 3-10% up closings, the third one should get taken, because that will capture about 90% of the up move. Anyone who got in at about 600 on United Spares, I think he should be thinking of at least partial, if not total, profit booking, because when the news is out, even if it's as good as the market expects, you will see immediate profit booking coming in, because the news is getting discounted.
Maruti was in news today, and the reason why Maruti was in news today, because Maruti, we understand, has finally agreed to a new wage program with the Gurgaon Union, and the average wage hike could be in the region of about 1,200 rupees per month. Varun, are you a bit surprised with resilience in auto, because auto sector per se is going through a cyclical slowdown, but excepting Hero Honda and TVS Motors, other auto stocks are holding on?
I think one should basically split up the sector. I don't think auto as a whole we can take a call whether it's positive or negative. I think there are specific stories which we definitely like at this point of time. As far as the agri space is concerned, I think we have seen a revival of monsoons towards the last couple of months. Therefore, we would be positive on tractors and agricultural space. I think the CV market also is showing some early signs of turnaround. I think once the interest rates start kicking in, we might see some kind of a up move in IIP, and IIP numbers are very, very closely linked to CV numbers. So I think I would be positive on that space also. Now, as far as two-wheelers are concerned, there is definite signs of slowdown. We keep hearing from various dealers about inventory building up, and even this festive season is not expected to be good. So I would stay away completely from the two-wheeler space. But I think as far as the agri space and the CV space is concerned, I think I would be very constructive on that.
Ashwini, what do you make of today's price action in mid-cap real estate? Now, mid-cap real estate, no one owns them, no one likes them, and markets, they love to hit real estate stocks.
Well, there are enough reasons why no one owns them. And what we've seen in the last 3 years, that it's the worst quality stocks that tend to move the farthest, and tend to move in large spikes. So chances are these stocks will go up, a bit, but I don't think they will really start outperforming in the market or make new highs, etc. And the advice should be for people to stay with quality. At least their money will get protected. If you have to be in real estate, Godrej Properties, it's been a stock which we've recommended often. Around 550, if you can get that, or rather keep a stop about 550, and this should give you levels closer to 680 to about 700. DLF is also moving fairly well, so stay with the larger real estate stocks. I won't go too much lower, because when problems or skeletons crop out of these companies, you can't be sure.
Ashwini, today we did see return of strength in FMCG. Do you think that's a one-day wonder, or now it's time to once again align with the classic defensives?
Well, I think defensives are probably going to go out of fashion, and if you are going to get some kind of a rally, that would be the opportunity to exit some of the defensives and move into the aggressive stocks, because I'm fairly clear on the view of the market that it's now beginning to turn up even for the medium term, and defensives generally in bull markets tend to remain flat to bullish. So chances are that we should see medium term consolidation in all of these stocks which have run up fairly hard over the last 2 years. So defensives can probably work for 2 or 3 days, but not really looking forward to these stocks making fresh highs.
Today selling in PFC and REC, Ashwini, a good time to get in, and do you think those stocks will be dominated by dip buyers in the near term?
Well, I would think so. Whether or not the package has any merit, the idea here is that as rates go lower, as the rest of the market is getting into a bullish frame of mind, these stocks have made a huge base around these levels, and now as they cross the higher end of their ranges, I think another 20-25% upside on both PFC and REC should be easily available.
Varun, from the high beta group, which is one group you are bullish on, metals which are trading below book value, PSU banks which are nearing their book value, or asset owners which are now nearing bankruptcy levels?
I think the only group out of the three that would be positive on is PSU banks. I think the State Electricity Board package that has been announced removes a very big overhang. Almost 25 increases in electricity prices have happened in the last 14 months, and we are very, very hopeful that a lot of states will actually opt for this restructuring or bailout package, whatever one may want to call it. So I think every year if the state electricity boards do go out and restructure their tariffs and their loan gets recast, then a lot of these PSU banks will have question in terms of their asset quality. A lot of concerns that the market had, whether all these loans will become big NPAs and all. I don't think that is going to materialize. So I think that is the biggest positive for PSU banking space, and that is a space that we clearly continue to like. As far as the metal space is concerned, I think the way China is slowing down, we continue to see very, very poor macroeconomic data coming out of China, and China has been the big driver of commodities, be it industrial metals and even energy in the last 10 years. So I think one would tend to be very, very careful in basically as far as metal prices are concerned, and I would tend to sell the metal stocks in this rally.